Hussbus bus stop. JP Hussey here, owner of the Hussey Team Mortgage Advisors, with this week's Hussbus bus stop. I think it's a good time to get a credit refresher right now because a lot has changed really over the years, right? Like with mortgages, we used to say as long as your credit score is a 740 or higher, you're going to get the best rates, all right? Well, that's changed over the past year or so. They have different buckets, 750, 760, 800, whatever it is, right? So it's good for us to talk about credit again because sometimes 1 point, right, can mean the difference of hundreds of dollars, thousands of dollars, right? Or even simply getting a loan, all right? So let's just talk about that real quick. Usually, all right, it all depends, right? There's a lot of stuff that goes into this, but usually in that 600, 640 range is usually the minimum score, all right, to get a loan. And that's probably in most cases going to be FHA, maybe VA, government loans, they're called, all right? Then you have conventional and all that stuff, right? But that's really the bottom tier to even get a loan, right? And then when the credit is down there, they look at the profile with a comb, a fine-toothed comb, they say, right? So it could be a bit difficult, all right? So if you're like a 599 credit score and you need 600, right? Sometimes you might not even be able to get the house, right? So that's huge, all right? And then the other side, right, if you're a 740 versus a 750, that could be a couple $100 in what are called points, right, that go to the rate. If you watch some of our other videos, we kind of talk about how rates work and pricing. So there's a lot going on with credit nowadays, all right? First tip I'm going to give you, Credit Karma, Experian, that's one of the credit bureaus, but directly to them. Any of your credit cards, you always see when you log in, hey, view your credit score, right? Those are what are called consumer credit scores. Now, they're not bad, but they aren't usually accurate at all. Fortunately, they're always a little bit higher than what a lender's going to pull, all right, to give you money, give you a loan, all right? So they are different, all right? Now, they are good to see what's on your credit. It's really good data to see your credit card balances, other things on your credit. If, God forbid, a collection pops up, those are really good to kind of just continue to monitor your credit. But I will tell you, the scores are always usually a tad higher than what a lender is going to pull, okay? So that's the first thing, because we get that question a billion times, so I'm hoping this reaches the masses and everybody knows that it is different, okay? So that's the first thing you need to know to make you more efficient when going to buy a home or opening up another credit card or things like that. Now, some of these places might use that score and they pull a soft pull. There's all these different models, right? Don't get me into this credit game because it's crazy and chaotic. It should be simple, but maybe one day we'll get there. But that's really one thing you want to know to make you dangerous and efficient, all right? Second thing, remember those credit card balances, right? Remember the usage, right? So if you have a credit card and the limit, right, is $10,000, right? You really don't want to go over, if you can, right? I know things are tough out there, right? But this is tips to get it down. You want to try and keep that balance at 50%, which would be $5,000 in this case, or less. Really 30% and maybe 10% of the limit, right? So if it's $10,000 balance, right? That's the optimal spot to be. It's actually better, hear me out here, it's actually better than not even using that credit. Because remember, that's what credit is. Credit is, and how you get a score, is the usage, right? And using it responsibly. So the credit bureaus like to see that you use your credit in a responsible way, right? And then paying it off, using it, because it shows that you know how to work it. And that could mean you get a higher score, which means you're a better candidate to get money. Because let's not forget what a loan is, right? A mortgage. It's literally money going to you in the hopes that you pay it back. All right? So, of course, it's going to be risk-based is what I like to say. All right? So that's a big tip right there. All right? Look at those credit cards. And if you have questions on this of the best way to do it, all right, if you have 3 or 4 credit cards, some balances are here, let's talk through that. Give me a screenshot of your credit. Let's look at that, and I'll tell you what to do to get the most out of it. Because remember, 1 point could be the difference of hundreds, thousands of dollars, or even getting a home. All right? And then the last thing, pretty simple here, but you'd be surprised, right? You'd be surprised. 30 days late on a credit card, a home, a car loan, right? You got to stay on top of this, right? Set up automatic payments every month just for the minimum, so at least you don't go 30 days late. It's automatically going. That's one big tip. Never go 30 days late. It could take years for your credit to recover from one measly late. And I've seen it, right, on just a little credit card where there's a fee. Watch those yearly fees that you don't use the card and there's a $100 fee and you don't pay. You get a 30-day late, and it can really hurt your credit, okay? Now, we have a lot of people that can help, quote-unquote, repair this credit, right? But it's tough. You never want to get... Do not think, oh, I'll just let the credit... I'll pay some credit repair to fix it. No, I wouldn't do that because it's not a perfect science, right? 30 days late. Don't do it, please. It kills you. It could set you back 3-4 years, right? For one measly late. So credit is important, whether you agree with it or not. It's important to get money. Hope you have a great day. Later. Hussbus bus stop.